Hello everyone, George DeSantis here with the look at the market for the week ending September 8th, 2017. As usual, I'll read the disclaimer with you. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I am not one. So we'll start as usual by looking at a weekly chart of the S&P 500. The monthly chart doesn't change very quickly, so it's something that we look at once in a while. So on the weekly chart, some time ago, I calculated a target of 25.22 a couple of weeks ago. And since then, we rallied. See, when we made this A, B, C, D triangle here, I calculated that target. Since then, the market rallied. Now we have a bullish harami. The body of this candlestick is totally engulfed by this. That's called a bullish harami. So we might expect further upside from here. At the middle of the chart, we have MACD trending up a little, but Shiken money flow, it looks more impressive here. We've been trending up with the money flow, the buying power, and Williams percentile remains nicely above the 50% line. And usually I consider that to be a bullish sign. Now RSI 12 is above the 40% line, so trend is still up. On the weekly chart, then, we still have a nice uptrend. Let's take a look at the daily chart. So here's a daily chart of the S&P 500, and a couple of things stand out here. We still have this ABCD triangle here, which we calculated the target of 25.22 from. But now, since then, the market rallied up to about 24.80 or so and pulled back a bit. Now we have another ABCD triangle. ABCD triangle. So this is another triangle which is a continuation pattern, a continuation of this uptrend. We should see a further up move from here. We also have the 4 EMA, the yellow line, trend line, above the 9 EMA, exponential moving average, and that is above the 30 weighted moving average. So the three moving averages are above each other, and insofar as moving averages are concerned, trend is up. Insofar as the MACD is concerned, we have MACD histogram in bullish territory above the zero line. The fact that it pulled back a little bit here doesn't matter. We don't have a divergence. Shiken money flow pulled back a little bit on the daily chart, but we saw that on the weekly chart it was nicely situated up. Williams percentile sitting above the 50% line, which is what we want to see. RSI 12, usually we use this on the weekly chart, but we can still take a look and see where it is, just dipping below the 60% line. So the bottom line is that on the weekly chart of the S&P, we have an uptrend. We have a triangle, an ABCD symmetrical triangle that is about to approach its target of 25.22. We have another symmetrical triangle, another ABCD triangle on the daily chart, and that should give us more upside. So I'm looking for more upside here on this market. Let's take a look at something else. We'll look now at some individual charts. And again, let me caution you that this is purely for educational purposes. I might mention if I own a stock, but doesn't mean that you should rush out and buy it, because certainly I don't know what your situation is like, your financial and other situations like. So be aware of that. It's just in terms of educational purposes that I'm doing these charts, mostly for my family and a couple of close friends. And before we go on to some stocks, let's take a look at two ETFs that someone asked me about. and those are ETFs of the oil patch, oil producers. The first one is XLE. Well, my opinion is that first of all, we have a downtrend here, as we all can imagine. Oil has been coming down in price, and so XLE has been in a downtrend. So recently it rallied a bit, but then it hit the 90% line, and we had a little pullback here. So I would not be inclined to buy it here at the upper end of the regression channel. The other thing is, if you look at um, the seasonal shows us a short, not a long, but a short from September 19 to October 3rd. So those are a couple of reasons why I wouldn't consider buying XLE, and very similar for OIH. The same holds true. On the seasonals, we get the same kind of short here from 9:19 to 10:3, very similar. And if we look at the extreme chart where we get the downtrend, we can see how the market is trending down, and we are up at the 90% line. So this is not, to my mind, according to the charts, not the right time to be buying this, even if you wanted to risk buying it in a downtrend. Okay, so let's take a look at some other stocks. We usually start with Apple, so we can see here that it appears that Apple is following a particular pattern. It rallies up to the, recently anyway, rallying up to the 90% line, pulling back to the 50, rally again, pull back again, rally again, pull back again. So we're now sitting at an extreme of 48, almost 50%, right? So I'm not trading Apple. I have a nice position in it. I'm holding it. So if we look at the seasonals on Apple, we'll see, let's see what we get. We see that Apple has a nice trend between October 7 and October 24th. And in fact, all the way into the end of the year, we get a nice trend up. So I'm holding Apple. It's a long-term holding for me, if there is such a thing anymore. So let's take a look at another stock, which is Facebook. And we will take a look at the seasonal first, since we're here. And on Facebook, we see similarly from October 10 to October 24th, we get a nice trade. 5 out of 5 years, we get a rally of about 9% with a pretty high rating. So again, I'm holding Facebook. If we look at the extremes on Facebook, we'll see that Facebook has been in a very narrow range. The extreme lines are very close to each other, just like with Apple and with Visa and other stocks. And Facebook is now at 38.6. It just keeps a nice steady uptrend. So again, this is one that I'm holding. We'll take a look at another one. So the next one we look at is Visa. As you know, I love Visa. I own quite a bit of it, and I intend to hold it for a while. We can see how the earnings shot up here, and I like that. And the price has remained in a nice, steady, narrow range of volatility here. So it's at an extreme of 78, still has a little room at the top. And let's take a look at the seasonal. On the seasonals, it is a very good trade in March, in January, going into February, January-February area. But if we look at between September and the end of the year, we get a nice trade October 25th to November 8th. And it's 77%, not the best, but not bad either. Profit of about 5%. I consider Visa sort of like, as my friend Terry would say, being the bookie. Because it seems to me, whatever you buy, whether you go in a store to buy something or you buy it on the internet, you're using your credit cards. And Visa is, of course, one of the most popular ones. So we get a little piece of the action every time a person buys something. I like it. Next one. Here's Adobe. Adobe, similar to Visa and a couple of others we've been looking at, very narrow volatility range here, so that the stock just keeps a nice steady climb. And right now it's at an extreme of 51, the middle line, and very consistent price and earnings consistency. So I like this one, Adobe, and I don't own it right now. I'm going to be looking to buy it sometime soon, but I don't own it right now. And let's take a look at the seasonal. On Adobe, we get a nice trade in March, but if we look at the September trade, from September till the end of the year, we see that going into the end of the year in November, we should come up with a pretty decent trade, which is about an 83% win percentage and a profit of about 5%. So I'm looking to buy Adobe. I don't own it right now. And here's a chart on Netflix. This is one I also like a lot. Increasing earnings, more volatility. You can see the lines are further apart, the regression lines. But right now it's sitting at 43.6% on the extremes, right in the middle of the range. And so it has room at the top. And maybe a decent time to buy Netflix here again. And if we look at the seasonals, we'll see what we get. First of all, we get a nice trade in January. From January 21st to February 4th, 92% win percentage and an average profit of 18%. But if we look between September and the end of the year, we see that October 25th to November 8th is a decent trade too, 91% with a 7% profit, 91% win percentage, and a 7% average profit. So I like Netflix quite a bit. Let's take a look at something else. Next one we look at is NVIDIA. NVIDIA, of course, has had such a nice run last year and for the better part of this year. Right now it's been a sort of a flat lining, but it's not terribly oversold. It's an extreme of 6. This might be a good time to start looking at NVIDIA again, if you're trading it. So let's take a look at the seasonals. And on the seasonals, we find a good trade here in August. And if we look between September and the end of the year, we find another trade in October. Okay, October 27 to November 11. And we get an 83% win percentage, an average profit of 6.68% with a pretty decent rating. So NVIDIA looks like it may be time. You notice that between August and the end of the year, we tend to get a nice uptrend, and then it goes flat between February and August. So we may be looking at an opportune time to be getting a hold of some shares of NVIDIA. I'm going to look at it myself. Now we'll take a look at two more before we end. One is United Rentals. Because of the hurricanes, United Rentals and Home Depot, which we'll look at in a second, both shot up, but now you see they are very overbought. So it may be a little too risky to buy them here. Put Home Depot and you'll see the same thing. Home Depot shot all the way up. It's at 90% now. And you could see when it gets to 90% tends to pull back. So we might want to wait for pullback if you want to buy Home Depot here, because the rebuilding is going to be over the next year or two or more. So I think that's all we have time for. So we'll call it quits for today. And have a good day. Have a good rest of the day. And we'll talk to you again next week.